This is Justin AMZN for Friday, February 28th, 2020. Take a look at the daily. What I really want to just point out here is that the Thursday and Friday here, the close on Thursday was 1884.30, and the close on Friday was 1883.75. So we basically were flat from Thursday close to Friday close. But a whole lot of movement happened. It gapped way down, traded back up. Look where it bounced. Pretty much the same low here. The low right here is 1815.34. The low right here is 1811.13. So it bounced off the same level that was resistance, then came in as support. This is just the second bounce. I mean, it could continue up from here. I mean, what if this turns into a V bottom? I think there's going to be some buying, probably come back up to this level, roll back down to the bottom here, maybe push on through. People get even more scared than they are here with this kind of volume, and even more people are getting in bearish, and then it starts to move up. I don't know. Could happen, but we're just going to have to take it one day at a time. But I thought I'd start the daily just to show that there is so much happening. I mean, it looks like, oh, great, we gap down, trade right back up, perfect fade. Okay, not quite. Here's the 5 minute. We traded down a little bit after hours, gapped way down. We rallied back up to 1863.4, came all the way back down to 1815, went straight back up at open, came back down. I mean, it was just choppy, really, really choppy. I was looking for triangles forming. So let's just look at, before I just look at Friday, we came right into basically the closing price. At this point, midday, sold back down, didn't quite get back down to these lows, and then got back up there right at the close. Probably some folks were thinking we're going to sell off again, like this. You know, we still had kind of some bigger choppy candles like this. Let's see, this was right around 130, 130. Yep, some choppy candles. And so we start moving up. And on Thursday, we started to go down. So even that was happening a little bit differently, the direction at the time of the market, or that time during the market. So here's where we found, and this was just a hard one to grab, unless you were just had a puke order or something that thinking we were going to be down this far. Traded up, came all the way back down, really nice hammer. At one point, this candle was triggering bearish, and look at the people who were going bearish right here. Didn't wait for a close below this candle, didn't wait for a close below this candle, and they're trapped, immediately trapped. Starts to move up, actually moved back down, went back up. Really nice Morningstar reversal, stair step, that reverse, that kind of thing. Another hammer here. And then this is where kind of the first triangle started to look like it was showing up a little bit here. So you had some lower highs. That's not drawing. There we go. Had some lower highs, and then this was relatively flat, but then this started to have some higher lows. It's like, oh, well, maybe that could be a triangle, and then nope, it just broke out, went straight up, and came back down, nicely retested kind of the point that it broke out here, and then started to go. And it's like, oh, this is it. It's, you know, it's going. It's a stair step. It should continue. Nope, that broke down, and it broke down not right back to the pivot here. It actually broke down further and took out the lows of this triangle, even slightly. I think this low, I'd have to go check the price. Really nice high wave candle here. Morningstar reversal, a stair step, should continue lower. Nope, that went higher. And just, again, look at how much it's moving at these pivots. You know, this one, upper wick, doesn't even get a close up there. Don't get a close below here. We opened at this one and bounced. And then just the choppiness here. I mean, this was the high. This was acting as a high pivot resistance for at least from here to here, wicked through it, and then continued and just chopped around it, looking like it was resistance. This one was breaking down. This was trapping more people here. And again, people thinking this was going to break down into the close. I was looking at puts into the close to think, okay, what can I do to ride this down? And I'm like, something doesn't feel right. And then it just skyrocketed. And this was a huge move. We were going to be have a bullish candle, but not as strong. And it looked like it could have moved down and taken out the low and been a bearish candle one day with a huge upper wick. And instead, we have a very strong looking bullish candle, even though the strength came in the last 15 minutes here, or kind of midday for about half an hour as it did this, but it didn't have the strength to keep this from happening. So anyway, a lot of different things happening. It's really hard to kind of frame the trade. And even looking at the options, like this is calls. This is the 1875 calls that give you a decent price for your risk reward. The challenge here was there's no volume. I mean, the volume is tiny. There's just barely any volume. There's a few spikes here, 153, 38. I mean, there is some volume down here. I mean, it's just not very big. And so it got me thinking, it's like, all right, is there a better way to play this with the massive amount of volatility? And there is, and I'll get to that in a sec, but I just want to show you what happened into the close. I mean, 1875, you didn't know it was going to move into the money. But I mean, it was cheap. You could have bought a couple of these absolute zero, $100 risk at 2, 3, 4, at the right price, 30 minutes, 20 minutes, 10, 15 minutes into the close or before the close, and just get out at any price you wanted, basically, anywhere in here. Now, I would not have recommended holding right into the last minute. You can have issues with brokers. It can end in the money. Anything can happen that is going to give you a bad close. But if you just set out a market order, it should have filled instantly. Or if you set a limit that was already working prior to the last minute, that's doable too. So there's a couple different ways to play this. Mainly the least risky one is absolute zero. So you're risking the exact amount that you're willing to lose, and not putting anything else on the table, because it really could just go to zero, and it almost was there. What was really crazy to see is a couple hours before the market was closing for the Friday for the month, even around noon, you had a couple hours left. There was huge premium still in these options, and we weren't at the money. I mean, 75, I guess that was right up here. So we're at the money, and there was it shouldn't have been, on a normal Friday, it shouldn't be worth that much. At that point in the day, right at the money, it should be worth less. So there's still a lot of volatility. It's like, okay, the lower we go, or the higher we go for puts, the lower we go for calls, there's going to be some premium that's just going to have to flood into these, and that's what happened. Same thing with puts. There, the volume was somewhat sporadic again here. You can see the levels, but you had. I'm sorry, I'm looking at calls again. At puts, it seemed like there was a little more volume, a little more steady volume here. Traded a little bit more continuously, from candle to candle. You don't have the huge jumps. Like you have a couple here, but mostly it traded within the same range as the previous candle until it started moving. This is just really sporadic. When you have this many gaps and some really small, level, I mean, you can see that there's literally holes in the data here because there just wasn't enough volume. In this, you can see, there's only a few holes here and a few here, like there's not as many. It got moving here, and that's a nice volume spike. What is that? 572. Yeah. So this is some strong volume on a specific option. This is the 1850 put. And this one went to zero at the end of the day, essentially. You can see some framework here. You got some support here that turns into resistance here. You have support here that actually worked for quite a while. And this is a great place that you could have been buying puts, is right around 5 to 6 in that range. Oops. There we go. So that would have been in here and here and in here, buying puts and then getting out of it right before the close because, it just rolled over. The other thing, like I said, to look at some of these, and there were some really large opportunities here. I mean, getting in, what is this, 6 by 5 here or here. I mean, these ran from 6, low was 6 on that one. Oh, man. Okay, I thought this was this is still just a 10 to 5 scale. So each line, horizontal line here is $5. That's a little rich. So I think the problem was if we go further away, you're going to see it even. Yeah, there's the holes in the data again. So another way we can go with this is looking at another week out. And it's something that just with this volatility, now obviously looking at the 1875, that's a week out, this is crazy expensive. This is going to have really late volume. So you got to go further out with your strike. So if we look at $2,000 or 2,000 strike, I should say, 2,000 point strike. That didn't, sorry, I like it a certain way. There we go. Okay. Look at this. This is the expiring next Friday, so you got a week's time still. You bought more time essentially. You have a low here at open. You have a pullback. You know, these are $100 risk value range here. So this was about $1, or less than $1. It's going to be less than $1. Kind of a hammer. And this was the bounce down at 1815. So that was down in here. So you have this setup here. You have a really nice hammer. This candle pretty much holds it. This candle starts to bounce, and then this candle is another hammer that actually comes right back into the low price that these, or almost to the low price that these three had. And that would have given you an entry 10 by 9, which is one of my favorites. So 10 by 9 ran right back up to the high, getting out at 13 would have been 3R. Great, that works. If you had held a little longer, you know, could have gotten out at 16, 17. Looks like even up to 18. But the next, you know, not the next pivot, but the pivot I actually made it up to was this one. So probably exiting, oops, wrong way. Probably getting out of this one 17. If you didn't get filled here, you got filled here at 17. And that would have been 10 up to 17, 7R. That works, you know. Came all the way back down to $10 over in here and actually held 10 by 9 relatively well. I don't know how spready this was to see if, you know, it was probably pretty spready in the morning, in the afternoon, like this, as things were just kind of really grinding. Probably a lot of premium got sucked out, and the spread wasn't as bad. But as soon as this happened, I was looking at what the prices were to buy and sell some of the stuff, and it's just like there was huge disparities, like a couple hundred. Well, in this case, you know, for real risk, I mean, $100. There's probably a couple $100 of spread on some of these, just the way that they were moving. There were some lower dollar price ones that I thought it was like the buy was the bid was like 4 and the ask was at like 1 or something. It was crazy large spread, and it really just kept a lot of people out. That was on the one expiring the same day. Now these a week out, they're going to trade better. They're going to trade with a little less spread. I mean, there'll be some, but that was something that I thought, you know, I need to get away from some of this volatility same day. Let me see what else I can do. Same thing with puts. You just got to go a lot further. If we go look at 306, but I think 1700 is one place I started, and I was shocked to see this is really expensive. It's like, I'm going to have to go out even further. What does 1600 puts look like? Okay, these are still between like $9 and $10, and they have some huge ranges on these candles. I was actually kind of frustrated with this because I don't want to go further this far out anyway. It's a week's time, but there's so much, I don't know, fear that these are, people are paying way up for these. I mean, this was $5 here. You're at 1500. We're almost at 1900. Like the close was, well, the close 1889.18. No, that wasn't the close. The close was 1883.75. And we're talking about a $1,500 strike. You're almost $400 away, and it's still worth It's still worth $500, 400, $500. It moved, but can you imagine? Like, so puts, I'm like, okay, I'm gonna have to stay with something else a little bit different. And in this case, it didn't even go bearish, where the puts would have really been worth that much more. I mean, a few times during the day it did, but you can see all of the holes in between in this data here. So it may have been okay, decently okay. You can see there's not too many gaps. There's some going through here. Some holes in the data. I don't want to say gaps because you normally talk about gaps as from one day to the next. So anyway, something to look at. I'll see what I can do to look at the current week and the following week. So for the first week of March, that would mean looking at the uh, March 13th strike. So that means we're going to have Friday the 13th. And then that means going out a little more in strike also. So here we are. Yeah, there's just no volume at 2100, and it's still decently expensive. So we're just going to kind of wait and see how things settle out. But if we come back to this, I mean, this one's cheap again. You can almost do episode 0 here. Well, I guess you could have had episode 0 right at open for $100. That would have been nice. Get into that, and you're out at $3. Get in for, set the order up, buy at 1, no stop, get out at 3 within a couple minutes. I like that setup. I'll have to watch for that to happen again. But anyway, we'll keep an eye on same week and start looking ahead a little bit, see if there's something we can do to just get away from some of the volatility. And so buying a little more time and a little further out of the money. Now, the plan is not to hold it, over a weekend or hold it over anything that's going to be really volatile. The idea would still be to day trade at this point, but we'll have to evaluate and see if there is anything we can do to get into a cheap one and hold it overnight if we're up significantly. So that's one possibility, because basically if you're going to get stopped out, if it crushes past your stop, whatever, I mean, you risk small enough, you're going to risk maybe 2-3R, maybe $200-$300 on an entry, and your stop is going to be $100 below. But if it's moving against you and opens up the next morning up big, and you end up going down 2 or 3R, I mean, we'll get it back. We'll figure out what's happening. We'll flip, we'll change, and do a day trade on that day, and make it up for that swing. So there's some ways to do that it's not the end when you lose a couple more R than you expected. Now, ideally, you plan not to. You just lose the R you risked. But we'll see what we can get into, and looking ahead a little bit more. So hope that helps. And like I said, we'll look to see if we can get a little more continuation of a move. But we have closed officially, closed this. We've come all the way back down to the price of this candle right before earnings. We're back into this choppy range. I still like this uptrend, and I don't know that we're done trading through these for a little bit. I think we'll hold some support down here. If we gap down Monday and we're below this, that means we've taken out all these buyers. Everybody is trapped who was buying up in here, even more trapped, and it'll continue down. And it's not out of the question, because we did do something like that before. If we take out some of these lows, but I don't think it'll be as quick as we've done for the last few days here, moving down so aggressively. I think it could slow down a little bit. But I was thinking in this range where we had these recent prices, I thought it was going to slow down more through here, and it chopped around quite a bit on Friday. But coming down here, I think there's a lot more buying pressure down here. Like, look at all these lower wicks, that even if we come down, people will just hold through it. They'll know it'll go higher. And so there won't be as many people, panic selling to get out. So that's just my opinion. So we'll have to just kind of wait and see what plays out in the technicals, and look for opportunities on the 5. Hope this helps. This is just AMZN. Thanks.